Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the New Zealand versus US dollar. Today's date is November 26, 2024. And it's the day before the RBNZ announces an interest rate decision, which will be in the new trading day tomorrow. The expectations are for that central bank to cut the rates by 50 basis points to 4.25% from 4.75%. And over the last month or so of trading, maybe a month and a half or 2 months, the price has been the New Zealand versus US dollar has moved sharply to the downside. What would turn the bias around for this currency pair going into or after the rate decision? I'm going to talk about that in this video. Or what are the targets on the downside if the momentum continues in the downward direction? I'm going to talk about in this video as well. So let's get started. To understand the broader picture, let's take a look at the daily chart. And if I take a look at the daily chart, I'm going to put a red box right around this area right through here. This area was defined by different swing highs. You can see all of them are different swing highs on the top side, and then swing lows, more recent swing lows forming a floor between 0.5848 and 0.5859. Now, there has been times where the price has moved above the high end. In fact, only one right here going back to like June or July of 2023. And there were times where the price moved below the swing area right here. I guess that was in October of 2023. And again, this month where the price had 2 days or 2 or 3 days earlier this month where the price fell below that level, rotated back to the upside, and more recently have moved to the downside. As mentioned, the low price today has reached a new low going back to October, November of 2023. So the new lows for the year, new lows for a year in trading for this currency pair, and also outside of this red box. And that red box, the lower end, again, was defined by the 0.5848 to 0.5859 level. So what we know is that if the price is going to reverse higher, we need to get back in that red box. So we need to get back above this area, and that's going to be the target on the top side in the new trading day, to get back above that level. That would increase the bullish bias and perhaps disappoint the sellers who have pushed the price outside of that level ahead of the rate decision. Now, on the downside, what are the key targets off of this daily chart? And genius to figure out that this low right here at 0.57718 is the next key target on the downside, and followed by this target right here, which was a low price going back to October or November of 2022. That level comes in at 0.57415. So those would be the next key targets on the downside. Break below those levels, and we start to get into this gobbledygook period right through here, where the market spiked to the downside and spiked back to the upside with lots of trading in between. So it would open the door for further downside momentum that could see the price ultimately move down toward the low price from 2022 down at 0.5515. But what is key would be these lows right through here, getting below those levels, and get below those levels, and you just open the door for further selling pressure. And we'd start to look more closely at something like the hourly chart for different clues as the price moves lower, potentially moves lower in this in the New Zealand versus US dollar. But clearly, what is needed to happen on the top side is to get above the old. Get back in the red box, get above the 0.5848 to 59 level. That would open the door for further upside momentum. You can see that more closely off of the hourly chart, and also bring in some other levels of significance from a technical perspective. What I speak to more specifically is the 100 and 200 hour moving averages. That's the blue and green lines in this chart. And here is the 48 level outlined off of the daily chart right here. Here's a 59 level off of the daily chart right here. And you can see that the 100-hour moving average is just above the low of that swing area. And the 200-hour moving average is just above the high of that swing area. So if the price is going to go higher, we need to get above both the high and the 200-hour moving average. If we do that, then we start to look toward the 38.2% retracement of this move to the downside. That's a November move to the downside as the next key target at 0.5889. Then we'll probably look toward the 100 bar moving average, 50% retracement. I would expect that there should be some slowing near the 50% retracement as a result of this these swing areas through here, where we had support come in near this level, broke through that level, and then use this level as resistance up here, probably a little bit above the 50% retracement would be a key target. But this would be the key target on the top side going forward if the buyers would take more control in the New Zealand versus US dollar and continue the upside corrective probing. So that's my technical look at this currency pair as we head into the key rate decision later on in the new trading day tomorrow. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.